Tuesday, December 13th, market analysis, Stan Ehrlich. Morning, approximately 10:30 California time, halfway through the day. And what a day we've got so far. Some very classic technical features have developed. We had some quite friendly, bullish news overnight, causing stock market indexes to open sharply higher. And as you can see, this is the spider. I start out with the spider in my recordings. It's my favorite index. It's my go-to. I'll also talk a little bit about the DIA as well as the QQQ. This morning, the spider opened right smack at the previous high on Thursday, December 1st, which was 410 exactly. This morning, we have a high of 410.49, just a hair higher, and it immediately started to turn down because of the huge gap that we had on the opening bell. And here's the 1 minute on the SPY. You'll notice that the first few bars are red this morning on the opening, very, very strong gap, because my strategies tell me that the market was too overbought at that point, right on the opening, and could have been, should have been, and was, past tense, 2020 hindsight, a good short sale for a scalp. They do turn green, by the way, at lows that are extremely oversold also. And again, this is 1 minute data, and it's part of my ER signals strategies. Now, gaps are almost always closed. I have said that almost every day for the months that I've been making these recordings. So the huge gap on the opening, we started, and at resistance, previous highs, started coming down right away, and we've come down all the way to a low this morning of 399.07. Yesterday's high was 398.95. So we left approximately 10 ticks worth of a gap to still be closed. But gaps are almost always closed completely. This has left a little bit of a gap, very small amount, that could have been good enough. What happens next? And this applies essentially to the DIA and the QQQ as well. Gap is closed, market came down, and is now apparently starting to work its way back up. If we can close strong today, and stronger the better if you're bullish, especially if it can rally all the way back up. And that's over a 10-point rally from the low back to the high. It's already gone down 10 points from the high to the low to close the gap. That's quite a bit of traveling back and forth. Not normal. But the stronger it gets, the more bullish it looks, and especially if it can close above the high that we have so far today, and in fact, above 410. That would be construed as a continuation of this stair-stepping up market, and probably will cause the market to rally all the way back up to 430, 431, 432 to challenge the high we saw back in August 16th. Now, the start of this was a gigantic bullish engulfing in oversold conditions on October 13th. That is why October 13th is green. On my charts, custom code, if you see green for price action, it means you should consider being a buyer. If you see red on the daily data and or 1 minute data, that means you should consider being a seller. The system's developed to pick major turning points as well as minor turning points. And it doesn't always work, but we have a built-in stop that's relatively tight, and we never have well, I shouldn't say never, we rarely have any sizable losses. So if I'm going to take the bullish side of this, we're going to rally back up, get stronger, close near the highs, maybe even make new highs. That could take parts of tomorrow as well. I'm well aware that the FOMC and the Fed's going to make announcements and policy announcements and so on about interest rates, and that almost assuredly will have a significant effect on price action. Not necessarily what you think, though. Sometimes bullish commentary ends up producing a little bit of a rally, and then all of a sudden things start to fall apart because what comes next? Are you going to have more bullish news to back it up? Then you've got a bull trend maybe starting. But if you have a little bit of bullish news in the midst of a bear market on a longer term basis, which is basically what we still have, then it's a rally to sell on. So if we end up closing poorly today, I would say maybe even around where we are now, 2 or 3 points higher on the day, 4 points maybe, and there's no upside follow through in the next day or two, and we start making lows lower than today's lows, that could be very, very bearish very quickly. And frankly, I still have to stick to my original opinions, what I've been saying for a long time, and I've been basically correct for a long time, that this is a rally in a long-term bear market. I pegged the Thursday high on December 1st, a week and a half ago. We bottomed out at some support, and then this morning we've got this sharp rally, but only on the opening, really. So this is a very important juncture. More strength could develop into a really good bull move and something much longer term for many months to come, next year, all year. Or a failure at this point and around these prices, and if we start to close it back under 390 again, that's going to turn this whole thing bearish again, and we will probably see a test of the October 13th lows or close to it within a month or so. Could be pretty quick as well, because bear markets fall faster than bull markets go up. So we're at a turning point here. I'm a little bit mixed. I favor the downside because the longer term trend is down. We did break that major bear trend line, but only for an hour or so this morning, and it stopped at a previous high, which again was 410. So we'll see what happens by the end of the day and early tomorrow. Check in and listen to tomorrow's recording and see what happens. Now, the DIA, Dow Jones ETF, is a new high ground since April. Yeah, it was not April. April 21. But it didn't hold it like the S&P. It went through buy stops, and anybody that had been short and put a buy stop in new high ground didn't like what happened this morning, because immediately they stopped out at the rally high, and all of a sudden the DIA is now at one point a little while ago lower than yesterday's closing price. So we are not doing all that well with the DIA at the moment. It has no gap to close at all, period. Again, closing below the lows of the last couple, 3-4 weeks worth of lows would be quite bearish. More strength, if it can maintain it on a closing basis and close a new high ground for the last few weeks, would be pretty bullish. So again, this is a very important turning point, up or down rather substantial amounts, depending upon what it is able to maintain for closing prices. We have a gap closure on the QQQ. It opened barely a new high ground for the last couple of months and didn't hold right away. It started to slip like the other indexes, and it tested for the first time the major bear trend line without crossing it, came very close to it, and also hit some resistance levels. So this has got some problems and is acting a little bit more bearish than the other indexes. The most bullish at the moment, and since October, has been the DIA, the spider's been kind of in the middle of things, and the least strength or the most bearish acting is the QQQ. It's the closest to making new lows since October 13th. So, difficult situation to be very adamant about bullish or bearish situation. I need to wait a little bit for more price action to develop. We'll see what happens. Let's talk about futures. Now, I usually start out with the wheat market just because we have one heck of a spectacular bearish engulfing ER signal, bearish signal on the top of the market, March 8th. Wheat went skyrocketing because of the war, a series of limit up moves, and our sell signal smack on top of the rally. Great sell signal. We don't have anything recently except a little bit of an oversold situation. So the bounce I was talking about is happening. It probably will bounce up a little bit more. I'm talking 795-ish, and then turn back down. I'm expecting to see lower levels. I'm basically bearish on wheat. Next chart. Soybean oil had a bullish engulfing yesterday. I made a point of stressing that you should consider being a buyer. We have a strong rally again this morning. The bullish signal is working. Today's only one day after the signal. Let's see what happens in the next days to come. And it's a little late to run after it. Never, ever, ever run after a market, either up or down. You almost inevitably psychologically get fooled into buying the high of a rally or selling short at the bottom of a break. And that's not a good place to do those things. So if you get a signal, you should be acting relatively quickly to have a smaller risk and more potential profit. This signal is working very, very nicely on soybean oil. Next, crude oil. Got oversold. I mentioned that the last few days. Now we see a rally yesterday, slightly and a little bit more follow through today. But the trend is down. I don't expect to see too much more strength, and I'd be looking for a place to sell short. Maybe I'll get another sell signal like this one on October 14th. And of course, on the top of the bull market rally, June 14th, we have a bearish engulfing. Again, this ER signal automated, 100% automated trading system is geared toward picking major market turning points to the exact day. Now, it doesn't always do that, but you will see, and if you've been following me, lots of examples of major tops and bottoms for months, if not more than that, prior and after a red or green daily bar, and that would be the ER signal, buy or sell signal. Again, to the damn day. Next, gold. I had a sell signal approximately a week ago. Didn't turn out to be a good one. It's not a good signal. We made higher highs, and today is definitely higher highs. And so if you didn't get out relatively quickly, you should certainly be out by now, because the fail-safe stop is just a little bit above or below the top or bottom of the signal day, the red or green day. We caught the bottom of the gold market to the day on September 28th. Now I'm talking about not a day or two early or a day or two late with many of these signals. I'm talking about the exact day the market turned. And yes, the strategy does enter positions on that day, as well as trying to get into a trade within a few days after. There's two basic techniques. We also pick this low as well in gold, July 21st. As you can see, it gave a couple of signals prior to the bottom. They weren't good. And a signal after the bottom, which still made good money. Next chart is, I think, silver. Nope, it's soybeans. Not a good sell signal there. That was incorrect, and we lost a little bit. We've got not a good one there. That's an adequate. I wouldn't call it the greatest buy signal back in May 17th. That's an excellent sell signal on top of the rally a couple of months before and after tops and bottoms. So we picked a turning point April 22nd. Nothing lately. I'm relatively neutral on soybeans. There's not really much of a trend lately. Next, corn. I mentioned adamantly the buy signal that I got on December 7th. Bullish engulfing, oversold conditions, create a green bar, and they're custom RSI and custom code causing these colors to change. We're looking for a little bit more strength, and this has been a good trade. It's been up now for the fourth day in a row after the buy signal. We're getting into a little bit of resistance, so I think it might fizzle out here soon, so that we're probably over halfway through this particular rally in corn. But that signal, past tense, was a very good one. Next, we caught the bottom on the E-mini. Now remember, this is not only a stock market index, of course, but it is also a futures contract. So October 13th is a buy signal for a lot of symbols. We normally get about 5 or 10 signals a day in stocks and a couple in the futures markets. On this date, October 13th, we got almost 100 buy signals in the stock symbol list of about 13,000 symbols. So that was a whopper of a buy signal on October 13th, and you'll see a lot of markets have turned on that exact day, and in most cases will be green also. Next, bad buy signal only lasted a day or so on silver recently, but now we're overbought again. It looks like it's going to continue to work higher, but I don't like buying anything that's overbought, and that's when it turns yellow on a rally. If it turns yellow on a break, then it gets oversold. And you can see my RSI indicator at the bottom of the screen. It's custom. Wells Wilder developed a close-to-close line chart back in the old days, very late 60s he developed this. And I've been at the markets starting as a runner on the floor of the old Mercantile Exchange and Board of Trade in 1971. That's 52 years ago. I've been at this a little while. Don't buy markets that are overbought, and don't go short markets that are already oversold. Golden rule. This was silver. Next, live hogs. Excellent buy signal a couple of weeks ago, shot straight up for 3 or 4 days. Nothing in the last couple of days. Not even oversold. Large trading range for the last few months. We had an excellent sell signal back here, red. We actually caught the top of this market on February 24th. And we had another fantastic sell signal March 31st. As you can see, these don't happen every day. This is geared for swing trading as well as scalping, because we have a technique that uses these green and red bars for day trades. But generally speaking, it's for swing trading, meaning the trade would last a few days to several. Many of these signals last for many months, and all you have to do is slow down your stop movement in order to stay in a longer term trade. And you can do that with the ER signals as well. This was live hogs. Let's go to live cattle. Getting up against resistance, trend is up, probably will break into new high ground very soon. Looking for some upside follow through. The trend is your friend, and it's true. What's in motion tends to stay in motion. It's true also. So I'm looking for a little bit higher levels. We had an excellent buy signal at the bottom of this break on September 29th. We had a fantastic sell signal at the top of that rally on April 22nd. And that was live cattle. Next, heating oil. Pick the top. Picked another top to the exact day. Picked the low, first low of a double bottom. Got very close to the most recent high here. we have a buy signal that didn't work very well. I mean, it went up a couple of days, but not that much. So there was room for some profit, a small amount, granted. Got oversold just a couple of days ago, and now it's rallying, no surprise. But the trend is sideways here for many months since the earlier part of this year, April, May, June. It started to go sideways in this very big sideways trading range. By the way, once it decides to trend out of this trading range, it probably will have a very long and big extended move because this is a very large top or bottom that is being built. Heating oil. Okay, next chart is soybean meal. We got very overbought. I talked about that. I expect to see it come down more, but 439 starts support. We're not there yet. And you might drop into this trading range a little bit more, but I expect it to start bottoming out around 440, 439, down into probably the 420s, and then turn around and start to go back up again. We caught this bottom. That's an excellent one. We caught this minor high, soybean meal. Now the next chart is OJ. We caught the high. We came close to the high. That was a bad buy signal, small loss. This is a good sell signal, and that was a bad buy signal, small loss. I reiterate, we don't take large losses under normal market circumstances. Our stops are relatively close, but because the signals are so accurate so frequently, it works out pretty good. Next chart is coffee. Well, we got the low recently, came down, created a double bottom with a gigantic bullish engulfing yesterday. Normally that's a buy signal, but we weren't quite oversold, so it's not green. Otherwise it would be. Next chart is coffee, and we've got the top of the market. We've got some excellent sell signals earlier. Lately, nothing's going on except we did get oversold on this last break. No bullish engulfing, so I don't have any green specific ER signals. No surprise it's rallying, but the longer term trend is basically down, and I'm expecting to see lower levels very soon. We're back into a resistance area, and we did gap up yesterday, so that may very well be a little exhaustion gap. Today is fairly strong, but we'll see what the next day or two brings. That was natural gas. Let's go to high-grade copper. Up against a little resistance. I think the market's about to turn back down. We caught the bottom of that break with that bullish signal, and we caught the top of this rally back in March with a red bearish engulfing. Again, the system is built to pick major turning points, and it does pick minor ones, and it makes a few mistakes. Next one, platinum. Came very close to the bottom here with a good buy signal. That's a very adequate sell signal, not quite the top. That's the top on a good sell signal for a week or so. That's a decent sell signal on almost the exact high for a week or so. And we did catch the top of this market in platinum way back in March 9th. The top for months prior and many months afterwards. Next chart, cocoa. Had a great sell signal, lasted a couple of weeks, a month or two ago. Not too much more going on here. I see an adequate, not that great buy signal, worked though. And that's pretty much it. Not a lot going on in cocoa as far as these signals are concerned. Next chart, we had a adequate sell signal, went down nicely for a few days, but it's been going sideways since in sugar. We caught a high, almost the highest high, just before a nice break. I think that was 9 days in a row that it went down after that bearish engulfing ER sell signal, early reversal sell signal. And we caught the top of the market for months before and months afterwards in sugar back on April 13th. Next chart, bonds. I had a sell signal a couple of days ago. I talked about it finishing a rally. At the moment, that does not look correct. We made a new high, higher than the bearish engulfing, and therefore we're out of this trade, lost a little bit, not too much, and looking for new signals. We're up against resistance. We have a bullish pattern that fulfilled its minimum upside objective. We've been overbought a couple of different times on the way up, with all the classic telltale signs that it's trying to top out. We did catch the top of the market back on August 2nd, and we caught the bottom of the market for a very good rally back in June 16th. Next chart. 10-year notes. Same kind of comment. That was, previous chart was the 30-year long bond. This is the 10-year short-term notes. Bullish pattern, minimum upside objective fulfilled, bumping against resistance. And again, a lot of telltale signs here that this is about to roll back down again. I don't have a signal per se, but my expertise for 5 decades is technical analysis. So this looks to me like it's trying to roll back down again. No signal at the moment. Next, we're back to wheat. This is where we started, and I'm going to leave you there. Thanks for watching. Have a great trading day. Profitable trading to you.